What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. So in this video, we're going to talk about a stock that everybody seems to be talking about, and that is NIO. JPMorgan recently upgraded the stock to overweight rating with a price target of $40, which simply means to buy. NIO is currently trading at $27 on October 22nd, which means that the stock has a potential to nearly double according to JPMorgan. NIO is one of the top EV vehicle brands exclusively in China at the moment. The EV market is still new and growing, so having multiple brands, multiple companies is not a bad thing. It's actually a good thing. It's good to have competition, which symbolizes that it is an attractive market where people want to get in. Now, there are a couple of things to keep in mind. In my view, no matter how much NIO grows, it's still playing in the Chinese market, whereas Tesla is already years ahead in technology and advancement. Tesla has its own manufacturing and is vertically integrated, where its margins outpace far of NIO's. On the other hand, NIO does not have a factory and relies on an outsourced company called JAC. Now, JAC is a Chinese state-owned vehicle manufacturer. Essentially, they are backed by the Chinese government. Now, this can be either a good thing or a bad thing. The good thing is that having the Chinese government as your sponsor means that you are playing in the heavyweights. You have a strong backer supporting you for all the growth that is necessary. The bad news is that NIO is strongly dependent on JAC. And if JAC decides to not be a supplier, not be the manufacturer of NIO, then NIO is at a high risk. And where does this risk go to? It goes to you and me. It goes to the investors. Now, the investors are taking on the risk. Another key thing that they do is the battery swap. Instead of charging their batteries when they're low, these cars enter into a dedicated battery exchange shops, reducing the time to charge and being back on the road quickly. But given the rapid advancement in charging technology, where there's a quick charge and takes less than an hour, the way NIO exchanges batteries is not ideal in the long term. Look, NIO seems to be very hyped up right now and trending recently. It does provide credibility given that their vehicles are real and actually being sold to residents of China. That being said, it is likely to be a big fish in a small pond. There are plenty of market share in the EV vehicle space for a lot of brands to survive. It may not be the leading brand or with the biggest market share, but there's still room to grow short term. With that, let's look at the charts, and here are the trades. Now here's a 4-hour chart of NIO. These bullish brands represent a consolidation along with an explosion in price. Here's the first part of consolidation along with an explosion of price, followed by another consolidation to an explosion in price, and another consolidation with another explosion in price. So here is a very clear trend and pattern of price action for NIO. What do we expect next? After this explosion in price that happened recently, NIO stock price is consolidating once again. The consolidation is pretty tight after its latest run, and it is looking for a breakout from this consolidation. And where is it headed to? Where could it potentially go? Now, my price target here is $33 and change. It can be a little bit above, it can be a little bit below, but $33 is my price target. But the key here is that the Bollinger Bands are starting to consolidate and it's building up energy. The more energy it builds up, the stronger the move it will be. And the move, honestly, go up or down. But what is the high probability trade here? Of course the price can go down, of course the price can go up, but what is the high probability given the historical patterns and the growth story here? It is possible that there is a huge sell-off, but the higher probability of this trade is a move higher. It is currently building up and running time off the clock to boost higher. The question is, how long would it take for this consolidation to take place? How much energy does it need to build up in order to break higher? Would it be a matter of days? Would it be a matter of weeks? Or would it be a month? So for option traders, I'll be very, very careful in terms of timing this breakout. Now for stockholders and shareholders, it would be good to pick up the stock as the 50-day moving average comes closer to the price. What happens if the price just dips dramatically? What you have to do is to put in a stop loss order in place to protect yourself. My suggested stop loss here is $23.70, give or take. So that's it for this video, guys. Please invest safely, subscribe to the channel, and hit that like button. We thank you, appreciate you, and see you next time.